Before watching the video, don't forget to subscribe the channel and enable bell notification to never miss an update from us.
Hello everyone, this is Ashima, and in this video we'll be talking about privatization of banks, the further steps. So we've all heard the budget speech in which the finance minister had announced that government is looking at disinvesting from public sector banks, and there's a proposal of two public sector banks being privatized and one general insurance company being privatized in the coming fiscal year, that being 2021-22. So, why is all of this happening? And more of it has come to news because bank unions have also called for a 2-day strike opposing the move of government. That is a disinvestment policy that the government is taking for. So, why is it? What is the scenario? We'll be having a look at all of that. So, stay tuned and do like the video and share the video. Now, going ahead. Now, initially, if you people remember, there was a time when government was looking at nationalization of banks, right? So there was nationalization of government-owned banks that happened in 1969. So there was once this time when government was bringing in more and more banks under its umbrella, under its protection, whereas now there are hardly 12 public sector banks, 10 small finance banks, and there are 22 private sector banks. That is, public sector banks are comparatively less compared to private sector banks. So what exactly has changed? What are the demands that have brought in this change, right? So 1969, as we were talking about, there were 14 large private sector banks that were brought in under the umbrella of government. Why was that then? At that time, the need of the hour was a socialist approach. Why a socialist approach was required was because uh, people needed to be involved with the banking sector, with the mainstream, because at that time the landlords used to have more power. So aligning the people with the government, with the banking industry was required. Second of all, bringing in the facilities of the government to the table of people, but for everybody that is involved, be it from the rural sector or urban sector, bringing in the facilities to the people at their doorsteps, that was required. So for that, government needed agents, and those agents were banks. So government decided to nationalize. That were 14 private sector banks that were aligned. And before this alienation, that was in 1969 when this unification had happened. Before that, in 1955 and 56 were also very important. 1955 was important because at that time State Bank of India was nationalized. First nationalization of State Bank of India. Then in 1956, it was insurance sector which was nationalized. So there were certain steps which were being taken at that time because the requirement of the government stated so, right? Now, after that, Reserve Bank of India has allowed privatization, or you can say private sector banks, to flourish. And seeing how they are growing, seeing how they are setting their roots up, is what is bringing government to favor private sector banks more. But why is it government completely going to leave it? No. There is something that a policy was introduced in the budget, that was a bare minimum involvement. That is the minimum required for the government. That is, there's a certain amount that is required, that government should invest at least this much, that it remains under the control of government. Government has certain say in everything, but it does not have to invest much into it, right? So that is why a bare minimum approach is being taken by the government. So 14 largest private banks were nationalized in 1969, and SBI in 1955, insurance sector in 1956, as we have already seen. So there were three rounds as of now where this unification thing was conducted by government. What were the rounds? In the first round in 2017, SBI's associate banks and Bhartiya Mahila Bank, they were merged into a single bank, right? Like as State Bank of Bikaner and Jodhpur, SBBJ. That was an associate bank of SBI, and that was merged into the main branch of SBI in 2017, with Bhartiya Mahila Bank also included in that. In 2019, Dena Bank, Vijaya Bank, and Bank of Baroda were merged. Then the third round had happened, and that was in April 2020. That was last year, where 14 banks there were around 10 banks were merged to form four banks, right? So one was PNB that sustained, which acquired Oriental and Union Bank of India. Second was Canara Bank, which acquired Syndicate Bank. Then Union Bank of India, which acquired Andhra Bank and Corporation Bank, and Indian Bank, which acquired Allahabad Bank, the oldest bank. So this acquisition had happened in April 2020. So there were three rounds for consolidation and unification that were carried out. And seeing the success of this, because now here, if you can see, there were 10 banks initially where government had to invest separately in all of them. Now, government had to invest only in four of them. Now, the savings from that amount of investment that went into the developmental purposes that the government is looking forth to, or where government feels that the investment is required as of now. So divesting that investment towards something that government believes in, towards something that is required, is what this whole purpose sustains for privatization. Now, if we talk about privatization of two public sector banks, that is going to happen, that's just the beginning to set the ball rolling for a long term. That is to make government invest in only a certain amount of banks so that it can divest the larger amount to a bigger purpose, right? That is the reasoning that government has given on its plans that it has stated. Now, which banks are we going to acquire then? Now, first of all, which banks are we going to acquire? Now, there is something which is a strong banks which are doing quite good, or the banks which are required by the government to have its say in. Those banks are the ones in which government is not going to change much, and they are going to be the same. Whereas those which are running quite weak, or they require more of a support comparatively, for them the privatization is going to take place. Has it been proposed before also? Yes, there have been certain recommendations from certain committees that have already proposed that government brings down the stake in public sector banks and opens it to the public. So, for that part, Narsimhan committee was there, which proposed that government should not invest 51%, it should invest 33%. PJ Nayak committee just said that below 50% anything is fine, but government should be investing below 50% because government requires that amount for investing in other sectors. Right? So now when government is finally taking into consideration, then who is going to help it decide that which banks are the ones in which it should disinvest and the ones in which it should keep investing? So for that purpose, there's a think tank that government has that is employed, that is Niti Aayog. Niti Aayog, the think tank of government of India, they are going to decide or make the recommendation as to which sectors, or you can say which banks should government disinvest in, right? But why is it required? Why is government thinking of that? What is so good in private sector bank that government wants to disinvest? So as per the recent financial stability report that was released by Reserve Bank of India, the non-performing asset ratio of all commercial banks that is tending to increase to 13.5% from 7.5%. So last year in September 2020, NPs were 7.5%, and this year they're expected to reach to 13.5%. Right? So non-performing assets are comparatively increasing in commercial banks, which is leading to bad loans, right? And that in turn is kind of eating up the money. Second of all, then there is the performance sector which takes place. Now, how performance sector? Private sector brings in so many advancements. You must have seen that all the private sector banks, Axis Bank, ICICI Bank, HDFC Bank, they're all bringing lots of technologies. They're all going digital and bringing in more and more technological advancements, more facilities to the people, right? and integrating more and more people and more sectors. Like ICICI Bank has deployed drone technology where it's going to map the area, and via mapping it is going to decide how much loan to be given to farmers so that bad loans do not go out in the market. Digital 2.0 is running by HDFC Bank, bringing in more and more digital technologies. Right. So there are various steps which are being taken. So that is one step. One another reason. Then HDFC Bank, now private sector bank has greater market capitalization than government bank. Like HDFC Bank MCAP is 8.80 lakh crore, whereas SBI is at 3.50 lakh crore. So market capitalization difference is there. Where HDFC was set up later than State Bank of India, still its market value, market capitalization is greater. What is market capitalization? A brief about that. Market capitalization is the number of shares of the particular sector multiplied by the value of each share. So, example, there are you can say 100 shares of HDFC Bank and one share values at 10 rupees, right? So that means the market capitalization of such a organization is 1000 rupees. Right. So that is the what market capitalization in number of shares in the market multiplied by the value of each share. So with that respect, HDFC is much higher placed rather than State Bank of India. So that shows that it is giving better services, better technology, newer products, and it is also at a better place in market. Right. Then market share of loans is also better for private sector, because private sector loans, now if we compare private sector loans, if we talk about, their loan share has risen to 36% now. Earlier it used to be 21% approximately, that has increased to 36%. Whereas for public sector, it has decreased comparatively. Decreased at what rate? It has become 59% approximately from 75% approximately. So from 75, it has moved to 59%. So the number of loans that are taking, now the share of the loans that is taken from public sector is comparatively decreasing, and in private sector it is increasing. Right? So that is another benefit of privatization. But is it all good and no bad? No. Private sector has its limitations as well. For example, the governance issues are sustained in private sector bank. Governance issues like, we all know about ICICI Bank MD and CEO Chanda Kochar. Her, favoring her family, or favorism was seen, for which she is kind of going under investigation. Then recently, Yes Bank has just been saved, like just saved by Reserve Bank of India, and there are various investigations that are ongoing as of now in Yes Bank. Last year, they just saved State Bank of India invested and saved Yes Bank. Then Lakshmi Vilas Bank, quite in news recently, and recently because of a lot of governance issues, it had to be merged with DBS Bank of Singapore. There's a Bank of Singapore, DBS Bank. With that, Lakshmi Vilas Bank had to be merged so that it could function or it could sustain in market. So it's not that it's always good, but there are certain good sides. Apart from that, when we're talking about NPAs, there are underreported NPAs. What is underreported NPAs? That is, exact amount is not submitted. There are certain, hidden assets that are there, or maybe certain facts that are hidden. So, what should government do then? See, we have seen the good part of private sector, we've seen the bad part of private sector. So, what should government do? Well, first of all, PG Nayak committee is quite reasonable. So, government is doing that itself, that is adopting to PG Nayak committee with having a minimum governance investment. And second of all, it is, rather than a blind privatization, that is, government people can take over whatever they want. Rather than that, government is doing something which is different, or can do something which is different. That is LIC, something of a model of LIC, where government ownership is there and autonomy is also there. So it's a freedom with a balance, or controlled freedom is there, right? So that kind of thing is something that can be looked forward to. Now, there have been certain shortlisting of banks, that is Bank of Maharashtra, Bank of India, Indian Overseas Bank, and Central Bank of India. These are the four banks that have been shortlisted as of now, as per the recommendations. Further lookup is going to be done, and post that, the decision is going to be taken as to which bank is going to be privatized, or from which bank the disinvestment is going to take place. Right now, with this, I'll be taking your leave. Thank you so much. It has been wonderful interacting with all of you. Do like the video, share the video, and if you have any doubts, comment in the section below. Thank you so much and have a wonderful day ahead.